Hey, everybody. Welcome back to episode 4 of Business Banter. I'm Spencer Johnson, joined as always with my co host, Mark Plymale. And today we're going to be talking about a few fun things. We're going to start off by talking about whether you should be buying or renting a house right now or an apartment, wherever you live. We're also going to talk about Mark's experience buying his first home, as I know that's kind of something pertinent to my life right now and a lot of people my age. And we're going to also cover the student loan or non forgiveness, I guess, that happened recently. And then at the end of the video, as always, we're going to be talking about some of the questions that our Diamond status members left in our credit community Discord, which, if you haven't joined, as always, that's going to be linked in the description wherever you're watching. But that's kind of the agenda for today. So, Mark, how's it going?
Pretty good, man. How are you doing?
Good. I think a little bit better than you, it seems, after last weekend. But
Yeah. I had a rough week last week. I was a little sick, but then also got a super bad sunburn. Went to the lake on 4th of July and
yeah,
didn't put any sunscreen. So got a horrible burn on my back and shoulders. That's 5 days later. I'm still feeling the effects. That was bad.
yeah, that is tough. But I guess happy late 4th, everybody, too. It's
Yeah.
our 4th of July episode, kind of.
Yeah. We always film these in advance. So it'll
Yeah.
be like by the time they watch it, like 6 days after or something like that. But
That's fair. That's fair. Well, I'm excited for today's episode. I think we got a lot to cover here. I think one of the more interesting topics that I've kind of dove into at some point or seen a lot of videos on YouTube made by people like Humphrey Yang or people like that, bigger personal finance creators, is videos answering the question, should you be buying or renting right now? And I think in our economic climate today, it's especially important to think about this. Because we're just in turbulent times compared to,
right.
The answer that might have been true 5 years ago is not likely true today. So I think it'd be something interesting to talk with you about since you have experience buying and I'm renting. So
Yeah, I think that I timed everything really well.
Mhm.
I bought my house back in 2020 and it was much easier at the time to make that purchase. Had I been trying to buy a house, if I was in the same financial situation I was in 3 years ago, I would have had a much harder time, obviously because of the rates going up, making, your monthly payment so much more expensive, but also just in general, the housing costs are insane. I mean,
Mhm.
everything has gone up so much in cost that the barrier to enter it's harder than it's ever been, and wages have not gone up the same way. So if you're younger, or hell, even if you're a little bit older, it's not easy to buy a house. It's very difficult.
Yeah, especially depending on where you live. I would, venture to say, I think honestly, the problems or the answer right now might be like a systemic answer. Like it's not just certain locations that are feeling pain from, you know, the crisis we just went through and everything, but especially like in places where I live, like I don't even have an option in Austin to whether I'm going to be renting or buying. Like
Right.
there's no way I could buy a house here or anywhere around Austin. So it's like, it's
What's the
interesting.
average price? Like if you were
I,
trying to buy like a single family home, like 3 bed, 2 bath, like what would be an average price in the suburbs around Austin?
yeah, I'm not sure. I just looked up the average price before we started recording and it said 530 grand. It's the
Okay.
average. So it's not, I guess, terrible, but
That's a little lower than I thought it would be, but still, I mean,
yeah,
that's a lot of money.
I think, yeah, it definitely depends on where you are. Also, I don't know when that data was from, so that could be a little bit outdated. I just
Could be
caught a
outdated.
glance of it, but
Yeah.
I know that in the city, you're not finding anything like that. So
No.
suburbs,
I would
maybe.
assume in the city, I would assume you're looking at least 800, 800,
Yeah,
900 bare minimum. I'm talking like a small, like not quite studio, but like a 1 bedroom or like 2 bedroom
yeah,
max place like that.
yeah. It's rough, and that definitely transitions a little bit into rent prices too, because rent prices
Right. It
here are also
does.
just insane. Like I got really lucky with the place I'm living in right now. We've lived here for 2 years, and we're moving out. Actually, I'm moving out in a couple weeks. My roommate just moved
Mhm.
out, but I will be moving back home for a while to save some money. Now that I'm doing this remote, I can do it wherever. But I wouldn't be able to really go find another place for the same price at all. Like I think our rent will likely go up 50% if I had to guess because he didn't raise it
Because you're
last year.
moving out. Yeah.
Yeah, and he didn't raise it last year, so we stayed for 2, and now he's raising it, and I'm like, I'm not even gonna try.
That
But
that's how it goes. Yeah, rent is the one thing that it will continue to always go up. Rent, you're
yeah,
never going to be renting a place and your landlord texts you like, "Hey, great news. I'm going to just cuz I like you guys, you're great tenants, I'm going to drop your rent by $400 a month. Thanks."
no,
You're never going to get that text. It's always just going to go up.
right. Yeah. Especially if I think honestly, if you're staying in the same place too, that's more the case. If the, um, like economic climate, once again, because I can't think of any other words, if that was to change and everything had to drop in price, I think that if you stayed in the same place, they'd probably just keep your rent the same. But if you move, you might be able to leverage that a little bit and get a lower price. But right now, it's the opposite.
You'd be moving to a smaller place, though, I think,
Right.
or you'd be moving further out. You'd be moving further out of your city or like closer to your job or not whatnot. If you're trying to look for a place downtown, you're bouncing around. I can't see you getting a cheaper spot. Like for the
Yeah.
same amount, like square footage, same location, you're not going to get it any cheaper than you're getting it now. There's just
Yeah.
no way.
Yeah. So going back to the timing real quick of your buy, I guess first of all, what is your stance in general on buying versus renting? Because I think that's an important thing. Like, are you somebody that thinks you should, before, like, not considering what times we're in, did you think that it's really important to try to get that house as soon as you could realistically, or are you somebody that's like maybe rent for a while and then buy at some point
I
later?
think there's nothing wrong with renting. I think that a lot of people do put a ton of pressure on people to buy very early. Like, oh, come on, dude, you're already 26. How have you not bought a house yet? Like, again, talking years ago.
Mhm.
Whereas I don't really think that there's no major rush. I think you need to get everything straightened out in your life. Kind of talked about this with getting into credit cards. You need to get yourself out of debt. I think paying off big types of debt like car loans and student loans, stuff like that, getting your credit in order, getting your income solidified. I think that's way more important. Those are things you need to focus on. And then eventually making that plan of how you can get into purchasing a house. But
Yeah.
I don't think it's a major deal anymore. I think it's totally fine to continue to rent even into like your 30s. I don't think it's as big of a deal as people think, as long as you're building up your financials, on the back end.
Hmm.
But I do think eventually owning a house or owning your residence in general is a good use of your money. Once you have enough saved up for that 20% down payment, I think avoiding that really low down payment just to get into buying a house, I think saving up for that 20% is a better call long term, unless the deal is just amazing and you're getting the house for way under value and something weird like that. I think right now, saving up that 20%, then buying when you're truly ready is a good move, but it's going to take a while for a lot of people.
Yeah. Yeah, that makes a ton of sense. I think I've definitely been preached to a little bit of the sense that, like, getting a home, buying a home is like one of the biggest ways to build wealth, which, I mean, technically I guess is true. It's a massive asset once you pay it off.
Mhm.
Um, but for somebody, like I said, in my shoes, it just seems like it's something that, at least living where I'm at, is not going to happen for a long time. And then you see, like, the stigma behind always renting. I think it is getting better, but I've definitely had people tell me before that, like, you need to be trying to buy a house, like save up to buy your house right away. And that's, I
Well,
don't know.
20% on $500,000, $100,000. Like, how are you going
Yeah.
to save $100,000 in the span of like a year or two? You're going to need to make
Yeah.
like $400,000
Yeah.
to be able to save it up that fast, And then once you do buy, your mortgage is $400,000 at 8%. Your payment is huge. Your
Yeah.
payment is massive. So just renting is not the end of the world. Yeah, your
Mhm.
money isn't, going to a future investment, but you have a place to live, and that's extremely important.
Yeah. I think another thing too, for me, what I love about renting is just the lack of commitment. There is commitment, of course, in the sense that you might sign a 12-month lease.
Hmm.
But even then, there's technically, there's ways to get out of it. You could sublease, you could do a lot of things. But
Hmm.
for me, especially, like, being younger and, like, newly out of college, I still don't even know where I want to plant my roots. So the idea of me being able to travel around and live in a different place for 6 months here and there, or whatever, finding a lease for that sounds a lot better than me just like, yeah, I'm going to buy a house right here because this is all I know. Although at the same time, I don't think you could go wrong either way, technically.
Right.
It depends on the person, but I do think that's a massive pro for renting, the freedom to be able to move where you want. And the other big pro to me is the fact that you don't have to pay for any maintenance.
Hmm.
You don't have to worry about the actual price of owning a home, which
There are,
that's a big
yeah,
price.
there's a lot of different benefits to renting. There's another one, no real estate taxes. Like, you don't
Yeah.
have to pay. Like, I pay a lot of money in property taxes. You don't have to do that when you rent.
Hmm.
Renting is, I think, definitely cheaper. I mean, we were
Yeah.
talking about those numbers earlier, but there's ways where renting is just 100% cheaper.
Yeah. Do you want to go through that? What we were talking about earlier?
Let's pull that and look up those numbers and show the viewers.
Gotcha.
I think it's pretty interesting.
Yeah, I guess for people that are just listening, you can come over to YouTube if you want to see this, but we're just showing a calculator from the New York Times that basically tells you what monthly amount, like what that break-even point is basically to whether you should buy or rent currently. So we'll go through some of the numbers here because I think it is really interesting and it's eye-opening for me too, but we're just going to try to make it as average as possible so everybody gets an idea of the current state that we're in. But yeah, we can go ahead and walk through this a little bit.
Yep.
Let's see. So yeah, if y'all haven't seen this before, I think I did find this from Humphrey Yang's video about this. It looks really familiar at least, but it basically gives you like a ton of different factors you can plug in to see, again, whether you should be renting or buying right now, and pops out a number up here in the top right that tells you if you can rent a similar home for less than X amount, then renting is better. And obviously, if you can't, then you should be buying a home in whatever location you're in. But for us, what we did is we went ahead and plugged in an average home price of about $400,000, which I think is probably pretty accurate across the U.S.
Yeah, that's about right when you look at every different city all across the U.S.
Yeah, so we plugged that in, and then basically just how long you plan to stay. We just chosen, easy 5 years. And then you break down all the different mortgage details, which this section's pretty interesting. I think you could break each of these down in like a whole video almost, talking about maybe not the mortgage, that's just kind of set, but how much you should be putting down and your length of your mortgage and everything is important. But these are kind of just all average factors. And I know, Mark, you are probably cringing at seeing this number here.
Yeah, the 3.75 doesn't exist anymore. So my timing of my purchase was it was the best like it could have been because my interest rate is 2.8%. But right now, the prime rate, it's 8%. It's at least that. You might be able to find a credit union. If you've got really good credit, you can get like 7.25 or 7.5. But any big bank you go to, you're at 8% most likely, if not higher, even more like 8.5. So
yeah.
That 3.75, that's fake news. That's not real.
Yeah, we'll come back to this in a second just because I want to plug in like your mortgage rate and then what we actually expect to see right now and just see how these numbers change. But for now, this is all basically what they had plugged in already for us. And then, basically you go through and talk about like how it says right here, what does the future hold? It's like how much your home prices, rents, and stock prices change and how that impacts whether you should be renting or buying. So you just add in a bunch of other percentages here. And these are, again, basically all average. I think the only thing we changed was this investment return rate, which is just average. Then you talk about taxes, closing costs. And then the big part that I was kind of just talking about here was the maintenance and fees for owning a home. I think this is a lot of time when people do these calculations, they skip over this part. They don't realize how expensive this can get. And I don't even know, this might be a low number. I'm not 100% sure. Maybe you could talk on that a little bit.
It just depends, right? So my house, when I bought it, was like 16 years old. So, and it had never gotten a new water heater or HVAC. And both of those were definitely at the end of their lives. So we knew from the moment we bought, we were, on borrowed time with both those. And since we bought, we've replaced both. Water heater was about 1,600 and HVAC was about 7,500. And that's just maintenance. So it just depends. I mean, but this year so far, we're 6 months into it, we've spent nothing on maintenance. There's been nothing break. Knock on wood, but nothing broken. We did some renovations, which is totally different. But as far as utilities and whatnot, everything's going just fine. So we might not spend anything this year on that. But I think, on average, maybe about $4,000 because it's saying 1%. So you have 4,000 to 400,000. Yeah, just depends. You can say 1% is pretty fair.
Gotcha. Yeah, I think that makes a lot of sense. This monthly utilities is one we also edited. It was super low. It probably could be higher than this, but it's not going to affect much here. But yeah, you kind of talk about all the maintenance and fees here for owning a home. And then at the bottom, you talk about the additional renting costs that can come. And like I just mentioned, I think these are a lot less like impactful than maintenance and stuff would be on a home. Because a lot of this is, one, just like covering you, for example, this renter's insurance, which isn't even this expensive in my experience. But then the security deposit is, at least in my experience, they pay it back at the end of the year if you just keep take good care of the house. So it
Yeah,
depends.
as long as you don't damage it, right? I mean, if,
Right.
there's nothing wrong with your apartment or your house that you're renting, they'll just give you that right back.
Yeah. So as you can see, I mean, this is a lot. There's not that much that could go wrong with renting as long as you are just a good tenant.
Yeah. Don't destroy your property that you don't even own.
Right. So I guess as y'all can see, we plugged all that in, and basically what it's saying is that if you can rent a similar home for less than $2,100 per month, then renting is better. So take that into consideration. If you're in an area where $400,000 is the average home price, then if you can rent for less than $2,000, which I would imagine you can in a lot of places right now, then logically that makes sense that you should be renting. Barring anything like you have a family or something that I don't know. There's a lot of other situations, but when the math works out like this, it's kind of eye-opening in my opinion.
It's saying that it's cheaper, which it is when you're looking at the monthly cost, when you look down those breakdowns. But the one big key benefit of buying a house is the fact that you do have equity that is being built up. Mm-hmm. Eventually, when you sell, you will get a big check back from that. Whereas opposed to when you move out of your apartment that you've been renting, you might get your security deposit back. But if you've been renting there for 5 years and you've spent $50,000 to $60,000 on rent, you are not going to get an equity check. That's it. The money's gone. Mm-hmm. So that is the big difference. I would definitely say these numbers are very accurate. It's going to be cheaper monthly to rent, but long term, I can't see a world where renting for long term is better than buying.
I don't think that they. I'm trying to look through this. I don't think that they include like the sell price and all that stuff. Like that's where things.
Well, that's the biggest thing.
Yeah,
that's where it really comes out, because you never really get money out of your house unless you HELOC or refi or whatnot. But you're talking about if you just bought, held, and sold like a regular investment, like a mutual fund. If you buy it 20 years later, you're holding on to it, and 20 years later you sell it. You're hoping to sell it for more than you bought it. It's an investment. Right. So the same thing's true with the house. Like if you buy it today, 20 years later, you sell it, you've probably paid off a massive chunk of your mortgage, plus the house has gone up in value. There's a lot of equity that you're going to get out from that sell.
Mm-hmm. Yeah, that's a great point.
Difference.
Yeah, very good point there. I think while we're on the screen, at least before I pull it down, we can just look at how this mortgage rate percentage changes everything. As Mark said before, it's for those that are just listening. Right now, the calculator is saying that the average mortgage rate is 3.75%, which, as we know right now, is just not the case. So if we plug in something like 8%, as Mark was saying, you can see that the price of owning a home goes up substantially. And this is something you don't have to worry about as a tenant. Granted, I mean, this does take into account all these factors, but I was going to say, technically your rent's going to be going up, but still, as long as your rent is under this value, what they're telling you here, which is now $2,910, if your rent is below that, technically it makes sense again to be renting, which just goes to show that right now, I don't see a scenario that one of these calculators would basically tell you to buy a house right now. Besides the fact that you had enough capital to be able to afford it and then refinance and then sell it a few years later or whatever, then that's still a bit different.
And this is also assuming that 20% down payment, which a lot of people don't do. Back in 2020, a 20% down payment was a lot easier. Right now, a 20% down payment is very, very challenging. It's worth it though, because you avoid private mortgage insurance. And also it's just the cost to get in. If you just, 3.5% on a $400,000, house is much easier than the, 20%. It's more attainable. But if you're not putting 20% down, I mean, your payment's high. Your payment is super high. So does that change your numbers?
I was trying to more. I thought it would change a lot more, but it looks like,
because your down payment's only $16,000 on that $400,000 house.
I guess that they're still. I guess they're still just calculating it based on this 30 years, but still.
That looks a little bit odd.
We probably have to mess with more factors down here, maybe. Yeah. But
in general, if you're not putting that 20% payment down, your payment's higher. I mean, that's just basic math.
Yeah, I guess it might not change this number as much, I guess, but
it's still cheaper. Yeah. It's even more so true. It would be even more so true.
And I guess if you look at yours, it shouldn't be a ton different. But yeah, as you can see here,
that's so much better.
Yeah, it's a lot better. So if we plug in Mark's mortgage rate of, you said 2.8, right?
2.8, yeah.
then the average or the price that you should be looking for is $1,730 per month, which dropped that original by like whatever that was, multiple $100. Yeah.
Well, that's 200, but yeah, then the true 8%, I think it was like a $1,200 drop.
Oh yeah,
almost $3,000. Yeah,
which is pretty insane. That just goes to show the power of getting a good mortgage rate.
Mortgage rate matters so much. People don't think about it as much as they should. Like, again, if the deal is just so good, the house is it's your dream house, you're getting it undervalued, and the mortgage rate is still 8%, I would go ahead and get it if you have the money. But right when you are able to refinance, you got to do it. Like, you got to get that. But that's another thing. Like, if you bought now, in a couple years, I would say within the next 12 to 18 months, you will be able to refinance. These rates are not going to stay this high for this long. They're going to stay this high. Might go up a little bit more till the end of 23, but throughout 24 and 25, they should start to drop.
Yeah, it's pretty insane. I know for me personally, I don't want to harp on this calculator for too long, but I have just messed around with it. Y'all can obviously mess around with it. I don't know if you can see my URL. Basically, I just looked up rent versus buy calculator.
We can put the link to this in the description.
That's true. It's just, I think for me, especially doing it even just now, it's really eye-opening to see, like, it makes me feel more at peace, I guess, knowing that I am going to be renting for at least a couple more years, I imagine. So it shows that it technically is a good decision, especially where I live, where the average home price is, you put in something like 600,000, 60. I mean, yeah, these numbers go a little bit insane.
It's a lot.
But
God, man.
Yeah. So
you have to make so much money to afford that.
I know.
That's crazy.
That's
like
wild.
To truly be able to afford it. I think still people buy houses and they really can't afford it. Like on paper they can, but they stretch themselves thin, and that's another reason why they can get themselves in the credit card debt. But to truly be able to afford a house like that, you got to make a lot.
Yeah. So it's an interesting time. I'll stop sharing this now just so we can get back to chatting about it. But it is a very fun thing to mess around with, in my opinion.
Do you have a goal of buying a house in like a certain X amount of years, or is it nothing that you're like really?
Yeah.
What are your thoughts on that?
I think for me, I would imagine that I would buy my first house. That's interesting. I would imagine buying my first house after I got married, in my eyes. And for me, one, that is still a few years down the road. So say like 25, 26, or whatever, that's 2 or 3 years. Then at that point, I would definitely be hopefully already on the search for a house. But also I think, well, now, especially with my job change too, where I'm self-employed, I'm not gonna be able to easily get a house on my own for a while. And also need the income to do so.
You'll need like 2 good years of that to show.
Right. So I've been pushing off like probably at least 3 years, before I even really consider it. And even then I'm like, I feel like I have a good couple of years in me where I do want to figure out what I want to do. Like, I still don't exactly know where I want to end up. I have a lot more traveling domestically to do to figure out what I want to do. So that's kind of what I need to be more focused on this year and the next coming couple of years. Because I don't know, I do love Texas, and I could see myself living here forever, but there's so much more to experience too. So I'm gonna go check some things out. But
no, I love that. That's a good answer.
Yeah, I'm excited though. How many years ago did you say you got your house?
About 3. It's going on 3. Yep. September 2020 is when we closed. No, it's really not been that long. It feels like it's flown by, but yeah, just about 3 years.
Yeah, and I guess what pushed y'all to buy? You were already married at that point, correct?
Yeah, we got married in 17, and we moved into an apartment together right after. Before that, we were living separately. We stayed in the apartment for probably a year and a half, and then we found a house to rent. We were like, we got to get out. The apartment complex we were staying at was awful. Like, it was a nice place, but dude, apartment complexes in general are terrible. There's so many loud people coming in at 2 a.m. and stuff like that. And we're a little bit older, like in our late 20s. We're like, this is annoying. We want to get out of there. So we found this house to rent, and it's super interesting because the house that we rented was eventually the house that we bought. We got super lucky because our tenant, you're not really supposed to do this, but she did it anyways. And I'm not going to dox her. I mean, no one knows my address. So she was renting the house out, but she was only keeping it to keep the address at district. They had moved out of district, but they needed to keep that address in order for her daughter to go to that certain school.
Gotcha.
But once she was done with the school that she's in now, she's going to a different school in a new district, so it didn't matter. So at that time, after we had been renting there for like a year, she didn't need the house anymore. And we had actually mentioned to her like how much we loved it. And we are like, hey, if you're ever willing to sell it, like we'd buy it, like kind of joking in a way. Like I figured that she was renting it out to make money, but she actually wasn't. So after that, she told us, she reached out to us right before the pandemic started. She was like, if you guys ever want to buy this, let me know. And I was like, oh my God, yeah, we do. We didn't have the money just yet, but we're like, we really do. We want to save it or we want to buy it. And pandemic hit, got, I wasn't able to work. So that made it a lot harder. Like when I was applying for the mortgage, we had to show a bunch of months worth of W-2s. And it was really hard because I had poor W-2s because my tennis club was closed. But we were able to show our tax returns and that helped. But eventually we were able to get approved and buy the house. But we ended up buying it because it was offered to us and it was the house that we were already living. So it just totally made sense.
That's awesome. That's a pretty cool story. Yeah, I don't think that happens to many people, I would imagine.
No. I mean, because most landlords, they're not buying it to rent it out to sell it to the tenant. They're just doing it to make money. It's like their job. They have a bunch of rentals and that's their way to make money. That's their livelihood in a way.
Yeah. Do you see yourself ever going that route of renting this house out and doing the same kind of landlord-esque stuff?
Yeah, that's the plan. That's definitely the plan. I want to own multiple different houses and rent them. And this is the first one. Whenever we move, whenever that's going to be, this one, we're not selling this one. We're going to rent it out.
Gotcha.
And I would like to do that with like at least 2 or 3 other houses and then other like commercial buildings like that as well. That's definitely my long-term goal.
Nice. I think that's something that's pretty similar among a lot of personal finance YouTubers, interestingly enough. Like I know I talked to, Ben Hedges in a interview once and he was saying the same thing. That's basically like what he's doing is buying properties. And I think right now he's making like luxury, like Airbnbs basically.
I'm going to go. We should actually do this. We should do a trip up there, like get like Daniel and like other people to go. Cause I've been talking to Ben about it. I've been chatting with him on Instagram and it's not done yet, but it's very close. He said probably another like, a month to 6 weeks max. Yeah. And then it's done. Cause it's up. I don't know how to pronounce it. Like Minnewasaca. It's like probably like an hour out of New York, but you could fly to New York and rent a car and get up there in no time. But I definitely want to go to it. It'd be sweet.
Yeah. That's what I was talking to him about too. Yeah, we should do that because
I'm down. Yeah, I've talked to my wife. Like, I totally want to go. What if we did like a boys thing? That'd be fine too.
That'd be pretty sweet.
Yeah.
But yeah, I think that it's such an interesting path because I don't know. It's just I've seen that in a lot of creators. But on that same note, when do y'all have plans to move out? And like I asked because trying to tie it back to what we were just talking about. Right now, it's like it's a pretty hard time to justify buying depending on your circumstances. So what is y'all's plan there? Obviously, you're not rushed, but
definitely not rushed. We just did our renovations and we're really enjoying living here still, but it's the next move. We're planning and the idea now, because now our house is rental ready. We have everything in place. If a tenant needed to move in here tomorrow, no, they could. We've got everything. Because what we want is like things to be like indestructible in a way. Like you want things to not break. So like getting the hardwood floor as opposed to the carpet made a lot of sense. Carpet gets really gross really fast, especially with a tenant who doesn't care about the property as much as the owner would. So we wanted to get rid of as much of that as possible. That way, if a tenant moved in and they were super messy, then all we'd have to do is replace the carpet in the bedrooms as opposed to the entire house.
Yep.
And also with the utilities like the HVAC and the water heater, those are good now for the next like 10 to 12 years. That's nothing we have to worry about. So that's going to help with, capital expenditures. Those are going to be lower. So we've got our house to that point now. But now the issue is, okay, we need enough money to buy a new house. And I'm not going to move to a house smaller than this. It's going to be, bigger. I want a real yard and I want, more space. And I'd love to move to the country in Kentucky, but that's even, that's super expensive.
Really?
Yeah, I would love to move to like 10 to 15 acres, but the land around Lexington is really expensive because it's all horse farms.
Gotcha.
So it's hard to get that. Be almost $1 million.
Yeah.
So suburbs it is, but we're basically saving up money, ready, getting that 20% prepared to go. and then waiting for the rates to drop. Because right now it'd be pretty hard to do.
Yeah.
But we are
Makes
looking.
sense.
I would say in the next, kind of like your frame, like 2 to 3 years, definitely we'll be out.
Yeah, I have a feeling a lot of people will be getting back into the market at that point. So we'll see.
Yeah.
I
It's
mean, I
gonna
guess
ramp up. Right now
investors,
yeah.
yeah, they're always investing, but they're gonna be going crazy. I know that's a big
Right.
thing around Austin too. Is like people, literally, it's just investors buying all the properties out here.
That's
It's
what's
wild.
going on. It's a lot of that, and that's happening around places like this too. They're
Yeah.
buying up the properties, making it harder for someone, someone like me who wants to buy a house and rent it, or someone like you who just wants to buy a house to live at. Like that,
Yeah.
that they're kind of pushing the smaller people out of it because they're just conglomerates, and there's tons of investors with millions of dollars. So they don't really care if the rate's a little bit higher now. They have the capital, they're going to buy it, and they'll refinance later on.
Right.
They still
Yeah.
profit no matter what.
Exactly. Yeah. Maybe one day we'll have that kind of cash flow, huh? This YouTube thing
Hopefully.
better work out.
Yeah, Google AdSense needs to really ramp it up.
That's hilarious.
In a couple of years, maybe.
Yeah, we'll see. But yeah, I guess on the same note, I think it'd be cool from my perspective to hear more about your experience buying your first home, because, like I said before in the intro, I think that's really applicable to a lot of people my age right now who want to be well prepared for when the time comes for them to buy a house.
Yeah.
Right now might not be the best time, but still, it's important to be prepared. Just like everything we're talking about here today, including stuff we'll talk about later with the student loans and everything. I just think it's awesome to hear about people's experiences. So if you want to share that, that'd be cool.
I feel like mine's a little bit unique in a way, just because of the timing, like trying to buy during the pandemic when, the rates have just dropped to zero. Everyone's trying to buy a house, but there's so many people on unemployment, and that income doesn't count. It was a very odd thing. Because we actually we had gotten some unemployment checks, and also like those stimulus checks, and that made things a little bit weirder for our mortgage lender, who's like, well, we can't factor in any of that. And I was like, well, that's fine. So we had to go through like a month or two of trying to work as much as we could and show our income, because we had the money available. That's the thing. Like, they don't really care about your down payment. Well, they do, but like, what really matters is them making sure that you have enough income to pay your mortgage. And like, we did, but it was hard to prove that because our W-2s had gotten basically cut in half. Like, my wife had been laid off for a short period. It was hard. But once we had kind of fought through that, like late summer of 2020, we had gotten the documents ready, the W-2s from the past 2 years, and also the better paychecks, more recent paychecks that had gone up. And also I'd started getting Google AdSense checks, and that helped a little bit too, just more income to show. Because what they're really looking for is like your debt to income ratio. They want to make sure that your payments don't, I don't know the exact percentage. I think it's like 45%. Like, they need to make sure that your house payment is not more than like 40% or something like that of your mortgage, of your entire monthly income. So once we had the income to show for that, it was a much smoother process. So our closing date was like September 17th or something like that. And basically, we wired the money. We just had to wire the down payment along with the closing costs, which the closing costs were $6,000 because we did 20% down. So it was like our house purchase was 170, and then the I think it was $34,000 down. So then $6,000 to closing. So we had to wire $40,000.
Jeez.
And then that was it. Once we did that, signed the papers, that was it. We were able to officially own the house. But it was a lot of paperwork, and you got to make sure that you're showing good income for the past couple of years, because they're going to take that average of the two, and that you're also showing good income recently on your like past 2 months of paychecks. Once you've got that, you're fine.
Yeah. I've always wondered too how the process works for, I guess for married couples, it's a lot easier because your finances are kind of commingled at that point. But when it comes to somebody buying a house that's just like a single buyer compared to a couple, I wonder how that process differs. I guess it's just the same, but the income has to be a lot more.
It's the same, but yeah, your buying power, unless your income's really high, your buying power would probably just be lower. Like, ours income combined at the time, it was showing, I think on our W-2s, probably like, I don't know, maybe 100 or so. But
Yeah.
yeah, if you're single, I mean, you got to make at least that. If you're making less, then you just have less purchasing power. You're not going to be
Yeah.
able to be approved for as much of a mortgage.
Gotcha. And how long did that mortgage process take? Did you like shop around at all, or I think you said earlier you did it through your credit union or something?
We knew a guy. My wife
Okay.
worked with one girl, and we knew this guy from years ago, and he had been doing it a lot, and he was doing big business at the time. So we just went with him. You could have gone with anybody, and it would have been the same experience. The rates were so low.
Yeah.
We liked working with him, but I'll say from the initial contact point to the final official closing was probably 3 months. But we did have the issues with the W-2s. Just because, I mean, we literally had to go like, I went a full month without a paycheck from my tennis club, and my wife went like 6 weeks without one. So
Yeah.
that just skewed everything. Had it just been normal, it would have been probably more like a 6-week process, if not even less than that, like a month. But we just had to go a couple extra weeks to show the income.
Yeah, it's interesting because I think too, y'all's situation is unique in the sense, like you said, you're buying it from somebody you knew. There was no stressor of like other competitors in the market, I
Right.
guess.
Yeah.
I think that's a massive thing that people have to deal with.
We didn't have to hire a real estate agent. We
I
had
didn't think about
nothing
that
like
either. Yeah,
that. Because
that's
that's
crazy.
expensive. That's at least 3%. And you're working with the agent, and they're showing you houses, but then also at the same time, you don't even know if you're approved. It's a lot more stressful. We definitely did it in I guess the easier way, but it was still
Yeah,
kind of difficult because the timing was weird.
yeah. So, do you think you'll do the same process for the next one? I mean, obviously not with the knowing the owner, but
I would probably hire a realtor. I think
yeah,
I'm fine with that because they're like professionals and they know what they're doing in a way. And I know what I want, but I don't want to have to like go around Zillow all over the time and like look
yeah,
around at houses. I think hiring a real estate agent or hiring someone in general who's more knowledgeable in a field makes a lot of sense. Like I hire
yeah.
a CPA to do my taxes because they're better than I am at that. So
Right.
I would hire a real estate agent to help me find. But since I'm not selling this house, I wouldn't need them also to help me sell, just to buy.
Mm, makes sense. Yeah, my mom's a real estate agent actually, which helps a lot, especially for me with
Nice.
rentals because
Yeah.
they get access to the records way before like Zillow does even.
Right.
And also they just get access to more records, which has been super nice. Like this apartment, again, we found it. It was already a really good price 2 years ago when we found it, and we locked it in for 2 years. But we literally got into it because she found the listing, and within minutes, like she got a notification, and within minutes, we basically said like, let's just take it. So we
That's
came in,
sweet.
we came and toured it, and we've had so many people ask us like how to get in this place now, and it's pretty.
That's
We got pretty
perfect.
lucky, but
Well, and she can help you buy your first house. That's sweet.
right. Yeah, and I think too on the topic of real estate agents as well. Like if that 3% is a lot too, but also if that's the difference between you finding like the home that you really want to live in compared to like one you're pretty happy with, like you're going to pay a few $1,000s for that peace of mind and comfort.
You're
So
paying, and they do all the dealing, like they do the negotiating and stuff like that. Like that's because that list price, you could try to go lower if it's kind of a buyer's market,
mm-hmm.
and they can help you with that, and that's where it could save you money. Whereas like if you're trying to contact the owner directly, first of all, that's time out of your day where you could be actually working and making money as opposed to calling people and stuff like that. I always think it makes sense just hire a professional. Like a lot of people like to do things themselves. I do in a way, but not something like that. That's a big deal. That's a very big deal.
Yeah, I agree. Man, I didn't even realize we were talking as long as we were already. I know we want to cover a few other things, but
40 minutes on that.
Already at 40 minutes. So,
oops. That's how the business banter goes. We just get off.
It's banter for a reason.
Yep.
Yeah, I guess, is there anything else on this home topic before we change gears a good bit?
Probably.
I mean, there's a ton. You probably do.
Yeah. There's a lot to say, but going back to the original question, buying versus renting, there's nothing wrong with renting a place. There's nothing wrong with it. It serves a great purpose. It is cheaper in the beginning. If you're planning on buying a house and moving around every 2 or 3 years, then I don't think you're coming out ahead by much because you're paying so much in closing costs. You're paying different fees for realtors. You're paying property taxes. Like for you, like you're younger and you're not exactly sure where you want to live yet. Renting makes a ton of sense.
Yeah. I think I'm of the same opinion there. But I'm not opposed to one day, even if I don't know exactly where I want to end up. I think it's really cool to be able to own that kind of asset and then rent it out like you want to do. So like I think there's plenty of ways to do it. Yeah, I thought that calculator was cool to go to, and then hearing your experience is really helpful. I know for people, especially my age, but we can always cover this in a whole nother episode too.
Yeah,
if we want to.
Yeah, we can do a full episode on like the process of buying a house.
Yeah,
because there's more I'd want to talk about, but let's go ahead and move on to the next section.
Sounds good. Well, I want you to also talk a good bit about this as well, because I know you're a little bit more caught up than I am. But yeah, the whole student loan forgiveness not passing, I think is a big deal for a lot of folks right now.
It's a huge deal, and it kind of got brushed under the rug in a way, and like the Supreme Court waited to the very, very, very last second to make their decision, even though they've known for months. I believe they've known for months they weren't going to approve it, but they've made the people with student loans wait and dangle and wait around, and now we finally know. So if you don't know, the Supreme Court struck down. They voted 6-3 against Joe Biden's student loan debt relief plan. I'm not sure the exact name of the bill, but that's what it is, student loan debt relief package that was going to allow individuals who earned less than, I think, $125,000 individual or $250,000 household, either $10,000 up to $20,000 of their student loans. That's not happening. So now, all of a sudden, September 1st, those loans will start accruing interest again. And then in October, the first payments will begin to be due. So if you've had student loans these past 3 years, you have not had to make a single payment on them. You could have, but you haven't had to. And they've been sitting at 0%. So if you've gone 3 full years without making payments on them, this is going to be a rude awakening. This is going to hurt a lot, especially because 3 years ago, inflation was not an issue. Cost of living rising rapidly was not an issue. Student loan or credit card debt being up to almost $1 trillion was not a thing. It was substantially lower. Now, all of a sudden, the poorest individuals in the United States, people with a lot of student loan debt, like when you're looking at their net worth, they are the poorest. Now they're going to have another bill to pay. So this is a big deal. What are your thoughts on it? I just want to get your thoughts. Do you think that it should have passed, or do you think that it wasn't constitutional like they said? What are your thoughts on that?
Yeah, I don't think I ever fully expected to for it to pass, in the sense of like I expected everybody's gonna have to pay their share, I guess, in a way. That was kind of my opinion on it. Whenever it first got announced, I think I might have. How long has it been? It was 3 years ago.
That's when they first stopped. They said that payments weren't due. They were, paused. It was called a moratorium. Basically, you weren't required to make payments, and that's been going on for 3 years.
Yeah, so I think
like
now,
March 12th of whatever 2020 they stopped. So it's actually longer than that, over 3 years.
Okay, that makes sense, because I remember. So I think I mentioned this in one of our previous episodes, but I did at some point take out a like $5,000 student loan. I don't even remember like doing it. Me and my mom figured it out one year, and we're like, oh shoot, like we have this loan. And I remember it saying like there's no payment due. For us, that's a pretty, for a lot of people, that was a logical situation of like $5,000 is lower than all of the limits that they're saying are going to be possibly forgiven. So why would we make the payments? For us, thinking about it from what we thought was a logical perspective, we're like, well, I don't want to just have this hanging over my head. It's $5,000. We'll just pay it off. We had the money to, because we've been prepared for a long time for me to go to college and stuff. And I'm working through college to pay for my school. So we just paid it off like in one lump sum, which I think obviously was the right move, and just goes to show that at the very beginning, I was like, I'm not going to, I think if you're waiting for the government to solve your problems, you're gonna be waiting a long time or get disappointed. So we just like kind of took it into our own hands, I guess.
I agree. That's what I mean. We did, like, we had already gotten ours taken care of before then. But I remember when I made a couple shorts on it, and I made one video on it, just like when this first got announced, because I think that package was approved like in August. I want to say it was like August or September of last year. It was a good almost 12 months ago. But in the meantime, we've been waiting around because it kept getting struck down, like the lawsuits filed against it. And people have been making content about it and talking about it in the meantime. But I, from the get-go, said it's not actually going to happen. It was just all it ever was a way for Joe Biden to buy votes in a way like, hey, vote for me, I'll forgive your student loan debt. And it worked perfectly. But most people understood that that was not going to happen. Like, there was no way
Yeah.
that was really going to happen. And now here we are 3+ years into the term, and it's not happening. So
Yeah.
it sucks for a lot of people who were hoping on that, but they've had 3 years at 0% to make those payments. And a few
Yeah.
years ago, cost of living was lower. It was not too difficult to come up with a couple $100s a month in payments, or even up to
Yeah.
like $1,000 or so, and really knock a massive chunk of your student loan debt down. So if you've been sitting on that, it's hard for me to feel super, super sympathetic. You know,
Right.
I hate
Yeah.
it in a way, but at the same time, I don't know, it's on you. You
Right.
took the loans out, right?
Yeah. It goes back to all kinds of debt, right? It's
Yeah.
you are the one that's taking the debt out, and whether it's for a circumstance that is you had no other choice or not, you know that at some point you're gonna have to make do with it. I
And
think. Go ahead.
why would I, as a taxpayer, have my tax payments go to someone else's student loan debt? Right? Like,
Yeah.
I dropped out of college. I never finished. I took out student loans though. I had like $25,000. So I was in the worst part of it. Like, I took a bunch of loans out and didn't even have a degree in general. Yet
Yeah.
I was still able to find a way to pay my debt off without
Yeah.
having someone else do it for me. So I'm definitely on the team of, like, if you take the debt out, you make the payment. Like, when is the mortgage debt relief package going to come and
Yeah.
relieve me of my mortgage payment? I don't think it's going to happen, right? So I don't feel bad for the students who took out a lot of student loan debt and now that they have to pay it back. I think
Hmm.
that's a part of going to college. It's really expensive. Or if your parents, you're in a great situation where your parents helped you save and stuff like that, and you work through college, and now you don't have any debts. That's
Hmm.
the best way to do it, because not
Yeah.
only do you have your degree, but you have no debt along with it.
Right.
But if you did go to school and you took out loans, I mean, it's on you. I
Right.
don't know why anyone else should be expected to pay that for you.
Yeah. Makes sense to me. I think it's interesting too to talk about what we talked about. I think it was in our first episode ever of the idea of being financially prepared for really any situation. And I would not be shocked if a lot of folks saw that the interest dropped to zero. They saw they didn't have to make payments, and they're like, well, I'm not going to make payments for now. I'm going to use this money for better things. In whether those better things were for purchases or for I'm going to start this business that I think will make me enough money in 3 years to pay off my student debt. Something
Yeah.
like that. I think it goes back to that idea of, like, we always seem to think that our futures are going to be way better than our present. And then 3
Mhm.
years comes around and you're like, shoot, I didn't even save at all for this. And now I haven't made
Right.
payments. And I'm just 3 years more delayed in paying this off. And I think it's super important to at least cover the fact that, especially if you have debt already taken out, once again, probably don't bank on the fact that the government's going to save you in that situation, but also make sure that you're financially prepared for whenever things come back to normal.
Right.
Yeah, I don't know. I don't know what your thoughts are of, like, whether you should have just kept making payments or maybe you stack it away in a high interest savings account for 3 years or what you do. I don't know, but either way, I don't know.
The mathematical side of things says, yes, you should have just, instead of made those payments, you should have invested instead. And then now, once the payments are due, sell your investments. And then hopefully, if you've made like 8 to 10% in the meantime, it was a better way to do it, like that, like saving the money at a higher rate and then now paying it off. That's mathematics. That's not how the real world works.
Right.
Most people aren't going to do that. We're talking about like the 0.0001% of individuals out there. Most people instead said, hey, 0%, perfect, let's go. That means I have an extra $300 a month to spend on whatever else I want, like more Starbucks or more vacations or more shopping trips, whatever. Like, people always find a way to spend more than they should. And yeah, I think it's stupid. I think they totally should have continued to make payments, double, triple up those payments. Now it's at 0%, so you can really hammer it away and really knock down that balance. And even if you didn't get it down to zero in the past 3 years, if you had a substantial amount of debt, like 50K, you probably weren't able to get it to zero, but you could have knocked a massive chunk down. And now you're
Yeah.
sitting in a better situation. Now your payment's going to be way lower when the interest kicks back in. but
Yeah.
that's not reality. Most people didn't do that. And those are the people the loudest protesting and whining about it, which it's a little annoying to see.
Yeah. It's such a good point. I think I definitely agree with you. I just think of putting myself in both shoes of I'm the person that said I'm not going to pay this off because I'm going to live a, partially better life for 3 years or whatever, which I would, that's a whole nother conversation. But say you wanted to spend that money on something else, you come out of it and now you're feeling like, oh shoot, I should have done something different, rather than the other person who just made the payments or paid down their debts to the point where they're living the same exact life. They didn't let lifestyle inflation creep up, and now they're living and actually really happy with their decision.
Their life's way better now. Once you pay your student loans off, like, you got to feel way better about yourself. Like, you just accomplished something that it's not easy to accomplish, because it is one of those things that I talked about this in our previous episodes. Like, student loan debt is weird because there's no underlying asset attached to it. It's your diploma, it's your college degree. That's not a true asset. Like, it can earn you more money with your experience. It can get you a better job, but you can't sell it. Like with a car loan, you have a car that's attached to that loan. With a mortgage, you have a house attached to it. Like with most types of loans, there's a asset tied to it, where that's not the case with student loans. So it's paying off student loans is a painful one, because you went through those years in school and it was fun. You probably partied some, but now the reality sets in. You have to pay that back. So it's a very tough thing to accomplish, but actually doing it makes you feel really, really good about yourself and feels like you can accomplish anything. Well, hell, if you can pay that debt off, then what can't you do in your financial life? So I think it's an empowering thing. And people who just want it forgiven, they didn't learn anything. You borrow the money and then you just get wiped away. Like, you learn absolutely nothing, and you have no skills to take away. Like, paying off that debt gave me a lot of skills, a lot of discipline that I think has helped me now later on into my life, into my financial life. So I think paying off is a really, really good thing for a lot of reasons.
Yeah. I love hearing that, because for me, I don't necessarily have the same experience, because it was smaller loan, but I know that student debt can like haunt people basically for their whole lives or longer. It could get passed down to their kids and stuff. Can it in a lot of cases? Something crazy like that. I don't know.
Probably so. I don't know how that works, but like, yeah, I mean, people who take out like $100,000-$200,000 plus in student loan debt, I mean, that's going to take them decades to pay off.
Yeah.
That's a lot of money, and it's painful to pay off because it's such a sunk cost.
Yeah, right. That's the biggest thing. You're not seeing anything come to fruition after that, but
no, you're just seeing better potential job situation. But that just depends on what your degree is. What if your degree is stupid? Like, a lot of people get stupid, useless degrees that don't actually allow them to, or give them the opportunity to get a nice, good, high paying job. Like, there's a lot of bad degrees out there. And if you got one of those, like, I'm sorry, that was a poor decision that you made.
Yeah, it's really a tough situation. But I think at the end of the day, this whole conversation should be pointing to the fact that, like, you should be taking your financial future like into your own hands and planning for big situations like this to come up. We can talk all day about, you should save 3 to 6 months in an emergency fund, blah, blah, blah. But everybody's financial situation is different. And if you're somebody with debt, like student loan debt in this case, and you're going to not necessarily set yourself up for success by not making payments on it whenever you could be, it's a hard lesson to learn, but I hope that people did learn that. And if they didn't have to learn it in this situation, I hope that they can, take it to their future situations that inevitably will come at some point.
Right. Yeah. If you ever have the opportunity in your life to pay off a debt, do it. Just do it. Focus on that first. You will be very happy later on that you did. You'll hate it in the meantime, but every debt payment that you make is a direct gain to your total net worth. Right. Every time you knock a chunk of that debt down, your net worth just went up that exact same amount. It's sweet. Right. It's actually a really good way to raise your net worth.
Yeah. It's last thing on this too for me is that since I am moving home soon, another way that I want to implement this lesson into my life is by making more payments to my car loan, which we've talked about in past episodes as well. But now that I don't have, $1,000 worth of rent over my head, I can easily make double payments on my car loan or more. Yeah.
And I would. I mean, if I'm you, I mean,
Right.
you can do whatever you want. I totally would. I'd be thrilled to be like, yeah, let's go. I can knock that down. It does me feel great when you own your car outright. And it's like an expensive car. So you'd be able to,
Yeah.
if you wanted to sell that down the road, all that money's yours. You don't have to give any portion of that back to the bank. It's your money. It's sweet.
Right. Yeah, I think that's what I'm going to take away from this too. And also for those of y'all that, if y'all need that extra push, I know I use, it was Personal Capital. Now it's Empower, it's just like a wealth management app. That's what I use for everything. And you can track your net worth in it. It's like once I added my car loan, my net worth just plummeted. But every time I make a payment, it starts to rise a little bit.
Yeah.
Which I think is really cool to see it in that way, because it gives you some motivation, even if it was student loans, to be like, okay, I am increasing my net worth, and it makes it somewhat gamified, which I think a lot of people need, especially in finance. So I don't know, just a little idea. But
I'll say this about that too. Like a lot of people, they put off paying off debt because it's just painful to see your hard earned, you earn your check, and then a massive portion of it goes away to debt. You don't really feel the benefit of that, even though there is a benefit. Whereas people are like, no, I'd rather invest that money instead. But like that, because they like to see their investment accounts grow up. But the thing is, the investment account, like if you're buying stocks, that is not a guaranteed. Whereas when you pay off a debt with a fixed interest rate, it is a guaranteed. You are all of that money that you're paying goes directly to that. Where if you're investing $1,000 into a stock, that stock very well may go down over the next week or two, or month or whatnot. And you actually haven't really helped your net worth in that same way. So like paying off a debt is a direct 100% gain to your net worth. Like if you're paying $1,000 extra you're paying your regular monthly payment to your car debt, and then you're also adding an extra $1,000, that $1,000 is directly guaranteed to improve your net worth by $1,000.
Yeah. And
whereas
also
stocks doesn't.
Right. And also, it gives you that exact rate of return because you know what your loan payment is. So, even if your car payment's small, let's say that right now it's like I said before in a previous episode, they told me I'd be lucky to find anything under 9% right now for a car. So if I'm paying off, say $10,000 loan, if I'm paying that off, I'm getting a direct 9%, return on my money compared to me hoping that I get 8% in the stock market. So it's pretty cool.
Exactly. I think that's the easier way to improve your net worth. People like to think that they're really good investors, and most of the time they're not. they're really just not. Yeah. But that's the best way to improve your net worth directly. Just pay off your debt.
Yeah, 100%. But we're about an hour in. I think it's a good time to take a couple of questions from our Diamond Status members in the credit community Discord once again. So if y'all haven't joined that, check it out. It's in the description. But we got 2 questions again today. Do you want to read them off? Or you want me to read them off to you?
You want to start with the first one with the Ninja, or do you want to go with the other one?
We can start with Ninja's question.
Sense? Let's do
sure.
Ninja's.
Cool.
Is this the Ninja's 3rd appearance?
I think yeah.
Okay.
Since we've been taking questions.
We do have other Diamond members. I think we have like almost 80. But Ninja asks a lot of questions. So as long as he keeps asking, we'll keep answering. If you're a Diamond member in our Discord, feel free to ask other questions.
Yeah, anytime of the week.
We do appreciate it, Ninja. yeah, anytime. And we'll get, whenever we're recording these, we'll get to your question. But I do appreciate you, Ninja. Thank you for asking again. But Ninja asks, which YouTube content creators outside of the personal finance niche inspire you both professionally and or personally? It's a great question. I kind of love this one because we get to talk about, the other interests in our lives. Like obviously we're interested in personal finance. I mean, that's a given. But we do, we're people and we have other interests. Do you want to go first, or do you want me to talk about some of the guys that I watch?
Yeah, I can kick us off real quick. I'll keep mine nice and short. I know as for people that have inspired me professionally, I would say, Ali Abdaal, which I think I've covered in our previous episodes too, was the guy that really pushed me to get started on YouTube. For those of y'all that don't know him, he's kind of marketed himself or put himself in this productivity niche kind of. But he's really big into YouTube strategy and stuff like that. So I had just always watched his videos because I loved his personality, and he makes really interesting videos outside of just productivity. But he also talked a lot about how to start a YouTube channel, and I took his 4-hour course on Skillshare with a free trial, and that's what prompted me to post my first video. So I kind of owe a lot of professional success to him. But also I've always just thoroughly enjoyed his content. I guess I'll do one for now. Then you do one so I can think of the second if I have one.
Okay. I got a couple, but I'll do one. My first one, the guy's name is Kyle Dempsey. That's his actual name, but his channel's name is called Trout and Coffee. It is the coolest channel. I discovered it like 3 or 4 years ago. And what he does, like his main job, he's a photographer, and like a videographer, but he built this YouTube channel basically to journal his life. It's the most unique thing I've seen. He's a really good writer. Like he writes like poems, and you can tell that he is very like talented in that way with his words and all this stuff that he does. And obviously he's very skilled with the camera. He takes amazing shots. But he lives in a scenic part of the country. He lives in like upstate New York, or like that's probably in Massachusetts. He never really tells you the town that he lives in, but it's a small town. It's very scenic, very beautiful. And him and his girlfriend basically just live their life, but they go around on these excursions, and he's always tracking the weather, but he's just journaling his life. So it's really, really cool. Every year on his birthday, he'll like write a poem or like write a note to himself on like what he wants to do over the next year. And then when the next year comes, he'll go back and look at the old one and see if he actually was able to accomplish it. So it's cool. And he's done super well for himself financially in the past few years because of this channel. And he's able to buy more stuff. He just bought some land and he's building a cabin on it. It's just the coolest thing ever. And it's like kind of inspired me for my Pioneer Production channel. Like I'm not nearly that talented. I've got a lot of work to do to get better at like making videos in that way. But he's one of his channels that notifications on the moment it goes up, I'm watching the entire video. They're always like 40 minutes long. Super, super, super cool channel. I'll link that in the description.
Yeah, that's cool. So many different channels out there. It's insane. Like so many different niches. I don't know. I guess going back to like a second or a couple more of mine, people that I watch just regularly. I watch a lot of Cody Ko's videos, which I don't know if you know him, but I like his videos.
It's funny.
He has like three channels now, and me and my girlfriend like that's like one of our shows we watch together, if you will. Like we just watch every one of his videos. I think he's super cool, entertaining wise, as well as like from a content perspective. It's really impressive, like the whole thing he's built, and he has a podcast studio with Noel Miller, and like that. He's doing insane stuff, which I think is really inspiring, but also just love his entertainment factor.
Right. He is funny. Didn't he used to be a like coder or something like that? He like worked in engineering or something like that. I remember that. And he got into the YouTube stuff, and that obviously did well.
Yeah. He went to Duke or something and did, he was like a software developer, and that's where he met Noel, who's like his guy forever. So
that's sweet.
So it's a really cool. He's got a cool story, and also like I'm pretty bought in. Like me and my girlfriend are pretty bought into like him and his wife's life together and stuff. Like it's just a cool experience to watch those like pure entertainment people.
Yeah, it's cool when they do pull their like their wives or whatnot, or their girlfriend at the time into it, and like you get to kind of follow them. I'm really big into channels where I can follow people's journeys through life. Like I don't need to see there every single day, but like when there's something big going on, I do think it's really cool. Like if they're going on a trip, I love to see where they're going, or if they're starting a new business, I love to follow along with that business. Another channel that I watch like religiously is Foundation Disc Golf, and the guy's name who started is Hunter Thomas. He is a inspiration. He's a very, very smart business person. Like he started the Foundation Disc Golf from Lynchburg, Virginia. And it was small, and he was basically just selling discs. But he was like, this isn't really going to work. Like I can sell a decent amount of discs in this town. It's not that small. But how am I going to scale it? And his idea was, well, YouTube, like the social media. So he started the YouTube channel, Foundation Disc Golf, and they've made 2 or 3 videos a week, every week, doing challenges, things like that. But really the back end is to sell discs, is to sell more of their merchandise. So they're making money now from the content. Their channel is like 100K subscribers. So they're making good money off their content and sponsorships and everything. And they've got multiple podcasts, but the back end business is stronger than ever to sell their products. So it's really cool. And he talks about that on his podcast too. like why he knew it was a good idea to get into the content creation and not just focus on selling more discs. Make content, build your audience, and they'll actually want your products. And then get some of the pros. He's got a few of the pros signed on with Foundation. Really cool to hear his insights on that side of business too.
Yeah, that's awesome. I mean, I think the biggest creators out there are big for a reason. They're super intelligent when it comes to business.
Definitely. They are. They're smart. They're not just like out there winging it. Like they are smart people.
Yeah. Yeah, it's so cool to see. But that was a fun question. I like those kind of questions. People, y'all can leave random questions. It doesn't have to be about that specifically to business or anything. But
that was the best question we've got, I think. Like the one I was most excited to answer. Yeah. I could list some other channels. I'll probably down in the description below. I'll link to a couple other channels that are some of my favorites. And Spencer, if you want to too, be like I'll do it like Mark's channels and then Spencer's channels.
Yeah, we can do that for sure.
But one more question. Let me find that one.
That one came from Jole, I believe.
Oh, the Jole one.
Yeah.
I don't know if this is really a question, but what are the top 5 features? Joel asked, what are the top 5 features you love about MaxRewards and how much benefit has Gold given you? Joel, actually, I guess we can say this. Congratulations, because he is now a developer for MaxRewards. And he's like our intern in our Discord. He helped us with this referral bot. He did a really good job. We worked with him helping us build that bot. And it's been super useful. I think he was able to use that to kind of leverage his way into a job with MaxRewards. So it's really cool. But you've worked with MaxRewards before. So what do you think? What are your top benefits of them?
Yeah, I don't know if I got 5 right off the top of my head, but I know personally, and also since they're not a sponsor of this channel, can't be given too much free promo here. God, no. That's what Joel's got to do now that he's working for him.
Yeah, he's getting paid for them. We're not.
Yeah, but no, I do genuinely. They're a sponsor of my channel, to be transparent, which is kind of how that connection got formed with Joel. But I really like how they connect my cards personally. Like I really like being able to see all my stuff in one place. And I know there are a lot of apps that you can kind of do that with, and people don't necessarily need it. But for me, with multiple lenders or cards with different lenders, it's nice to have them all in one place personally. Mm-hmm. That's probably my biggest one, and that would include 5 different things in there that I really like.
Yeah.
Yeah, I think I like the question more the perspective of like, I'm happy to see Joel succeeding, and he's a great dude. So we're happy to see that.
Joel, much earned. He's done. He's been a Diamond member for a while, and he's very active in our community. But also, taking on that intern role. It was kind of a joke at the beginning. We're like, yeah, you can be our intern. But then we're like, hey, actually, you're a coder. Could you help us with this? And he was like, yes, I could. And he was super helpful. So I always think that like people who have those skills are awesome. And I couldn't do anything like that. So I'm happy for him. I will say about MaxRewards, I love how they add those offers to all your cards automatically. And occasionally you'll spend on a card and you didn't even know you had an offer added to it. I think that's sweet. Mm-hmm. But I think what Joel's going to do is a lot of the back end work. He's going to clean up a lot of their coding. So I guess look to see some big changes coming from MaxRewards here over the next month or 2. But
yeah. And it's a small team. So genuinely, he's making big changes to the software. Like he's going to be helping a lot. So if you've had problems with MaxRewards, like everybody has problems with every app, I feel like, maybe you could get some questions answered in the credit community Discord as well.
Yeah, join the Discord and then reach out to Joel in the general section and tell him the issues that you're having, and he should be able to help you out quicker than contacting customer support.
Yeah, if Joel gets a plug for MaxRewards, we get one for the Discord. So that's how it works.
Always got to plug that. If you've not already joined, go ahead and do so. Link in the description.
Yeah, I think that covers most of what we had today. I think one really pertinent video that I think y'all could watch after this one would be our episode we talked about starting a YouTube channel, because I think we just kind of touched on it right here, but there's a whole bigger conversation of like whether it's a profitable business or not and how you could make a successful channel. And I look forward to having more of those conversations too, bringing on guests to talk about that. But I think it's a logical next video for y'all to watch, or just check out our most recent video as well. Mm-hmm. Or podcast, I should say, if you're on Spotify.
Right.
Or Apple Music.
We have a few viewers over there. I saw it ticked up a little bit on the downloads. Nice. I'd be interested if you are listening on Spotify, come over to the YouTube channel and and let us know who you are.
Yeah.
Because I am curious on who's like most of our viewers, the vast majority, 99% are on YouTube, but we are listed on every single other podcast streaming platform. Now we're on Apple Podcasts and all the other big ones too. So I'd be interested on who's actually listening on those other platforms aside from YouTube.
Yeah. Agreed. Well, Mark, I hope your sunburn gets better.
Yeah, it's
throughout the rest
close.
of this week.
lots of lotion.
Yeah,
It's getting
exactly.
there.
That's funny though. But yeah, this was a fun conversation as always. Everybody, thank y'all for listening or watching, and we'll catch you next Monday, like every other week.
Yep. Thank you guys. See you next time.